Hello there, I hope that you're doing well. Welcome to this new lecture of the Uncensored series. During this lecture, I'm going to be walking you through 2 buys which I took on Nasdaq. As I had outlined throughout my review heading into the day, I mentioned to you that I was monitoring whether or not there would be SMT established relative to the Monday low. Notice that we saw Nasdaq expand heavily towards the downside, whilst ES was being held above the Monday low. That right there was a huge daily SMT, which the SMT detector is signaling, as you can see right here. I outlined that if we would indeed see Nasdaq roll over, then we could potentially see a run towards sell-side liquidity, which was engineered over the past couple of days. Notice that the market expanded violently towards the downside, and we saw the market take out the Friday low right here. The moment that Nasdaq took out the Friday low, whilst we had SMT relative to the Monday low, we also saw SMT be established relative to the Friday low. So that is signaling to me that the moment that we take out that Friday low, that is a point of interest for me to be looking for a potential buying opportunity from. Notice that when we pay attention to the time right here, you can see that we're coming near the end of the macro from 10:45 to 11:15. So if a low of day or low of morning session at least is going to form, it should happen now. And therefore, what I'm looking for is I'm looking for the signs of rejection taking place of this level. Keep in mind that this is that Friday low as I drop into the lower time frames. Notice that I'm outlining the RBC which I had marked up within my review, in which I shared my game plan for the day, and what I'm monitoring is how price is going to trade around this specific level. Notice that the macro has now come to an end, and notice that we took out that Friday low exactly 11:14, so still during the macro window. The reason why this is important to me is due to the following. If we leave this low intact right here, then it's signaling to me that IBDA is indeed forming a low throughout that macro window. And what that signals is that we're likely going to see the market expand towards the upside soon. So what I'm looking for is I'm looking for this CB right here to be flipped. And what I mean by that is to begin using that CB as support on price. What I like is how we formed a high inside of that CB right here, because what is that setting up? That's setting up the market structure shift pattern, as you know, to be my go-to entry pattern. I see that there's a tracking correlation on the lows right here. If you zoom in to the bodies, you will see that tracking correlation. And the reason why that's important is because what it is signaling is that we're likely forming SMR at that Friday low, whilst we already have those bigger time cycle SMTs. So right here, what I'm looking for is I'm looking for this specific candle. And do you see how quickly this candle is beginning to expand towards the upside? I'm buying the moment that we trade above this high. And the reason why is because on a 1 minute time frame, you don't clearly see this. But if you look into the 15 second or even sub 15 seconds, so for example 5 seconds, you will very clearly see that we're displacing through that imbalanced range right there. Notice that ES was front running Nasdaq, so what I'm monitoring is if this SMT right here is going to get invalidated, and there it got invalidated. From this moment in time, I'm very confident in the fact that we're likely going to see Nasdaq reprice towards the upside. Now my objective for this trade was that RBC right here, because it lines up with that weekly open. So to me, that is a perfect objective if we're in fact going to see Nasdaq be repriced higher. So at this moment in time, what I'm monitoring is the following. What I'm monitoring is how Nasdaq is going to react of this sequence of imbalances which formed right here. If Nasdaq would only trade into this imbalance which I'm outlining right here and leave the lower imbalances intact, then I know it's going to spool towards the upside very quickly soon. Why? Because then these gaps right here will function as breakaway gaps, and that signals that IBDA is in a rush to get somewhere. Pay attention to the price as well where I'm trading from 600 right here. So what I'm monitoring is, okay, is price in fact going to reprice away from that level? Is it going to show an urgency to reprice away from that? And as you can see, it is showing exactly that. I'm outlining this low right here, and the reason why this low is important to me is because we displaced through that low with this large imbalance, and therefore this is a very important low to monitor. I do not want to see Nasdaq reject this low. If we would see NQ reject this low, then it would be a sign that we would likely retrace very deeply. But as you can see, the market is just expanding through that level right there. Now, what my eye is drawn towards is this sequence of imbalances right here. If Nasdaq manages to displace above this sequence of imbalances, then it would signal to me that that run towards the weekly open is pretty much guaranteed. And the reason why is because there's nothing holding price back from taking that run towards that weekly open. Notice that ES and the Dow Jones are already trading above this high right here. So the SMT detector is signaling 10-minute cycle SMT. And that right there is to me a warning sign. And the reason why it's a warning sign is because I need to see Nasdaq trade in sync with the other two indices. An imbalance forms right here, and that imbalance must function as support on price since that imbalance displaced above this low right here. So this imbalance is to me a pyramiding opportunity. 11:30 opens up, and notice that we're opening up and dropping lower right here. I love to see this, and the reason why is because that's giving me the idea of, okay, we're opening up this new time cycle and we're manipulating towards the downside. We have 3-minute cycle SMT be established right here. Notice how the market is respecting this BC right here, and we see the market expand higher. Now at this moment in time, what I need to see is I need to see continuation towards the upside. But what you can see is that that continuation is not coming. Instead, we see the market trade longer inside of that BC. So therefore, to me, there's absolutely no way that price should ever retrace deeply again, unless we might want to retrace all the way into these lower imbalances right there. So at this moment in time, price is consolidating, and I'm simply waiting. The question on my mind is Nasdaq going to find support inside of this BC? If it wouldn't, then we're likely going to retrace deeply and then it gets stopped out at break even, which is completely fine by me. But what you will see is that later I will show you exactly how I re-entered using a very low time frame, but we'll take a look at that in a bit. But what you can see is that price is consolidating right here. And in the back of my mind, I'm already preparing myself for the idea of, okay, this trade is likely going to be break even. Why? Well, Nasdaq should have run immediately with that 3-minute cycle SMT after 11:30 opened low. The fact that it didn't is making me believe that this is a new original consolidation, which could be potentially established for the market to reprice towards later. So what you can see is that this is original consolidation. Sell-side of the curve is being created now, and notice that the market is beginning to expand towards the downside. Could I have exited here? Potentially. However, I know that if I would have exited in this area and price would have found support inside of this lower imbalance and it would then have run up higher, then I would be pissed off by that. And the reason why is due to the fact that that would signal to me, hey, instead of me then sticking to the analysis of, okay, I've trailed my stop to break even. If price gets that low, I need to reassess from there. I would then be like, okay, you know what? I trailed my stop too tight. I got out prematurely, and that's my own fault. And that is something where, in my opinion, it's better to just take a break even than to take a stop simply because price is retracing. And that right there is something which I believe to be a very important rule to incorporate, where you detach yourself from the trade itself. And until objectives get met that you're aiming for, like, to me, it doesn't make sense to partial neither, because when you look at this, for example, look, to me, weekly open is still my objective. That's still the level where I anticipate price to draw towards. However, how we're going to get towards that weekly open, that could be the differentiating factor. So what you will see is that I get stopped out here at break even, but instead of me saying, okay, the whole idea is invalidated, I'm not going to be looking for anything else, what I will be monitoring is what price is going to do around these imbalances right here. Ideally, I would have loved to see these imbalances left intact. I would have loved to see them function as breakaway gaps, because then we would have literally seen such quick repricing higher taking place. But what you can see is that after I got stopped out right here at break even, what I did is I dropped into the second time frame. And the reason why is because by paying attention to these super low time frames, I will be monitoring how price is going to react off that price range of, let me just go back a second, of that lower CB, which have extended to the right, this CB. Notice that we see the market reprice into that range, and what I'm doing here is I'm monitoring something. I'm monitoring whether or not I'm going to see the signs of reversal taking place. So what you can see is that the market expands towards the downside and reaches that old inefficiencies range, and it trades into those lower imbalances, if you can remember them. If we see those imbalances be traded into, even though I want to see them function as breakaway gaps at first, what I'm then monitoring is, okay, how is price going to deliver around them? What you can see is that we repriced very quickly into that blue shaded box, and we see that the market has this large down close candle right here. Do you see that? That to me is a perfect sign of manipulation coming to an end. Why? Because the underlying order flow is still bullish. Why? Because of the fact that I already framed that we should be forming the low of AM or even the low of day based upon that 1114 candle. Remember? This candle right here on the 1 minute time frame. Outlining to you that this could be a potential daily low because all the signs were present from higher time frame to lower time frame SMT to how we delivered around that Friday low to signal, hey, this could be in fact a low formation taking place. So what you can see is that the moment that price retraces into this large down close candle, what I'm doing is I'm entering long again. And as price is displacing towards the upside, this BC gets created. That to me is a potential pyramid, and the reason why is because IPDA is showing to me on the lowest possible time frames that we're forming a smart money reversal right here, and that the underlying order flow is changing from sell program to buy program. And when you look at this fractal, it's obvious that this is our original consolidation right here. These highs are way too smooth, so that is giving me confidence as well to re-enter. Notice around what time I'm re-entering. I'm entering in close proximity to the next macro from 11:45 to 12:15. Notice that the market retraces right here, and that's again a potential pyramid opportunity. Why? Because pay attention to this leg on the left side of the curve. Do you see how the market expanded towards the downside, retraced higher into this inefficiency, and then expanded towards the downside one more time? The moment that the market reprices above this high, I know that we should never displace below this retracement leg again. Instead, the market has to find support there. So what you can see is that I'm pyramiding accordingly inside of this range, since the underlying order flow has in fact changed from sell to buy program. So at this moment in time, and by the way, for those asking, this is a 5 seconds time frame that we're looking at, and this is a super low time frame, as you can tell. So every single candle what you see is 5 seconds worth of time and price, of course. And what you can see is that we have this imbalance which formed right here as price displays towards the upside again. In my mind, I'm paying attention very closely to this imbalance right here. I don't want to see the market displace below that. We could potentially take out sell-side liquidity resting below these relative vehicle lows, but in my mind, I never want to see the market begin using this imbalance as resistance on price for a long period of time. So what you can see is that price is delivering in a very slow manner with a lot of back and forth going, and this is typical for the environment that we were in, where it was a high resistance liquidity run environment. And when it comes to trading high resistance liquidity run environments, what's very important to note is that in those environments, all that you can do is submit the time and let the market do its thing. Meaning, you simply sit back, you manage the trade accordingly, and you give it room to breathe. That's the way we trade high resistance liquidity run environments. You cannot manage it in a super tight manner. So here on the 1 minute time frame, and what you can see is that price is expanding into that imbalance which I had outlined prior right here. That BC which I entered off with another contract, of course, right here during that entry opportunity, but where eventually we slammed through. What I need to see right here is I need to see this imbalance getting displaced through. If price does not displace through this imbalance and we instead see the market reject it, what could happen is that we could go back and forth in this area. And that would be consolidation. If that would occur, that means, again, high resistance liquidity run and keep your stop where it is. So what you can see is that I trolled my stop tightly, meaning I decrease risk significantly already on the position, but as price is confirming to me that's in fact going to run by this imbalance right here, to me that's a pyramid opportunity. Why? Because everything is signaling to me this is a fractal market maker buy model. Original consolidation, sells it off the curve, buys off the curve. That's my anticipation. So this imbalance has to function as support on price. That's the top process. However, what you can see is that price is going to just chop around in this area for a bit. And this is typical when you're trading throughout launch. And when you're trading throughout launch, give the trade room. Give it space. Don't manage it too tight. So what you can see is that price is delivering in a very slow manner. And that right there is something which can be mentally draining. But when you know so clearly what's likely going to happen next, because you know that you're in sync, you know that you're aligned, then you can sit through that. However, if you have any doubts about what is happening, or you are second guessing yourself or whatsoever, then trading in high resistance liquidity runs is, in my opinion, something which must be avoided at all costs. The only time I am willing to sit through high resistance is when I know very clearly, okay, we took out a major sell side liquidity pool. We see the signs of a smart money reversal taking place there. And I know very clearly where price should reprice towards, which is that weekly open, as you can see. So what you can see is that the market is repricing lower from the 12 o'clock open. 12 o'clock opened low, as you can see. And notice that we have 10-minute cycle SMT on the highs. So at this moment in time, you can see that everything is being set up for high resistance even more, with SMT being present on both sides. So the market is being repriced towards the downside right here. And I'm keeping my stop at exactly the same price. And the reason why is because price should never trade below this red shaded box. If you go back to the beginning of when I dropped into the 5-second time frame, you will see exactly why that is the case. So at this moment in time, what I'm wondering is how price is going to react to this old BC right here. Do you see how many times the market found support inside of that BC? We traded below it right here to trade into this lower sequence of imbalances. But notice that we then displaced back above this BC instead of using it as resistance on price. That signals that the underlying order flow is now bullish again. So what you can see is that a new cycle SMT is being established on the lows right here. 10-minute cycle SMT. The market traded below this imbalance right here. But because of the fact that we have that SMT on the lows, I'm still confident with the idea that we're in a buy program. And that is why I'm willing to sit through this as well. Again, this is by far one of the most ugliest deliveries I've seen in a long time. And I was happy that I managed it accordingly. But from a 1 to 10 scale, I would say that trading this type of environment is a 5. So looking back at it, I'm very happy with how I managed the position, etc. But the amount of time it took to run towards my objectives was significant. So at this moment in time, what you can see is that after 12 o'clock opened low, and we saw 10-minute cycle SMT on the lows right here, and we saw the market find support inside of this BC right here. That right there is signaling, okay, we're still bullish. And the moment that we see this repricing higher occur, where price is invalidating this 10-minute cycle SMT, which was present right here, my eyes run to this BC again. Is this BC going to get displaced above? The moment that we would displace above this BC, invalidate this 30-minute cycle SMT, which is present relative to ES and Dow Jones, then I know, okay, the next run higher is likely going to occur. And the reason why Nasdaq was so messy in terms of its delivery was due to the fact that intermarket relationship was all over the place. Nasdaq, ES and the Dow were delivering in completely different ways. And because that was the case, what you see very clearly is that that is a decoupled markets environment. And because that is the case, that right there is an environment in which you need to be able to submit to high resistance. Notice that the market is now expanding towards the upside, and we see it reprice above these highs right here. Now, for those of you that are looking at this trade, I want you to keep in mind the potential risk to reward on this position as the open profit is floating. Because if you compare the initial risk versus the open profit at this stage, you will see very clearly why I was willing to sit through off that high resistance. Because I was buying near the low of day, which I already had anticipated that this was likely going to be the low of day, I'm willing to also sit through that high resistance because the reward is so worth it. Because if price would in fact reprice towards that weekly open, I had a minor risk on that position, but a huge profit potential. And that right there is how I'm framing it in the back of my mind. So as you can see, the market is trading inside of this BC again. And what I need to see is I need to see the market find support inside of this BC. I don't want to see Nasdaq displace below this BC and begin using it as resistance on price. The only warning sign which is present right now is that Nasdaq has yet to take out this high of 11 to 11:30 AM, as you can see. But from an intermarket relationship perspective within the current 90-minute cycle, which begins at 11:30 AM, everything is moving as it should. Why? Because both Nasdaq, ES, as the Dow were all moving in tandem by trading above this high. And that is signaling to me that during the current 90-minute cycle, price is in fact in a buy program. And that's also why I'm confident in the fact that this BC has to function as support on price if we're in fact going to remain bullish. So notice that the market is trading around that BC for quite some time. Notice that it's not retracing into it and immediately expanding higher. Because again, that's a characteristic for high resistance liquidity run environments where there's going to be a lot of time between the move from A to B. And that is something you simply need to adapt to, and that's something you need to accept. But at this moment in time, in the back of my mind, I've already removed risk. I've not trailed my stop yet within the execution, but in the back of my mind, I've already trailed my stop. And the reason why is because price should never displace below this imbalance again. I need to see the market begin running soon. So what you can see is that price is just consolidating right now. And when price is consolidating like this, a major tip which I want to give to you is don't look at the P&L. And the reason why is because if you would look at the P&L and it's fluctuating up and down, and it's moving simply up and down inside of a tight range, then what could happen is that you could become impatient. But when you look at it from an objective perspective, the key range which we're monitoring is still functioning as support on price. So that's signaling to you that this consolidation right here is being used to do what? To refill long positions. And that is how you frame consolidations and how you look at them when you know, hey, I'm in sync. I know that price is going to draw towards that weekly open. And that shows you as well the importance of knowing the A to B which we're trading in. So what you can see here is that price opened up for 12.30 and we're seeing the market reprice towards the downside. Notice that the market is being repriced towards the lower end of that imbalance and we wick below it. That to me is still allowed, and the reason why is because I'm looking at the bodies. The wicks to the damage, the bodies tell the story. Notice that we see the market trade around that cycle opened for all of this time, by the way. And that's again a confluence because where is smart money buying? Smart money is buying below the opening price. They're selling above it. Why? Because true opens are used as premium and discount filters. So what I'm monitoring right here is how Nasdaq is going to run now after we open low for 12.30. Ideally, I would like to see price begin expanding towards the upside because my eye is drawn towards buy liquidity resting above this high right here. Notice that the SMT detector is signaling SMT relative to this high between Nasdaq and ES, and I'm monitoring if ES will catch up by trading above this high. Now, the reason why I'm putting so much emphasis on the intermarket relationship is because intermarket relationship is truly at the core of being able to gouge through order flow. If there's SMT present on both sides of the marketplace, yes, you tell me what's the real SMT. So therefore, as I'm in this long, in order for me to frame the idea of further continuation higher taking place, I must see Nasdaq and ES move in tandem with each other relative to the current time cycle. So that means I need to see them both be in a buy program to confirm to me, yes, we're in fact going to draw towards those higher time frame objectives. So what you can see right here is that Nasdaq is about to take out this buy liquidity pool, and notice that we again see SMT be established, SMT with ES. And looking back at the execution and how I managed everything, I'm very happy that I partialed here. And the reason why is because if this SMT would indeed set up a run lower all the way towards my entry again, and I would get stopped out at break even, I know I would be pissed off. And the reason why is because I was up about 1 to 9R on that position. And that right there is a phenomenal trade already, right? And to not partial then would be foolishness, especially as there are these warning signs. So the fact that we did not take out this high and immediately just smash through it, but instead took it out and just rejected it like this with SMT being established was to me a major warning sign. And that is why I partialed where I did. Is that good management? In my opinion, it absolutely is. Because from a delivery perspective, this was an absolute mess. It was an absolute gross. And therefore, to basically guard my mental capital, I did the right thing. And that's something I'm very happy with. But notice that we still have SMTs on the lows that are being established right here. So I'm seeing that the underlying order flow is still bullish. So my main focus is on, okay, are we going to see Nasdaq begin accelerating above this high? Are we going to see speed and velocity be injected? Notice that it's now 12:45. So what is that? It's the beginning of the next macro, 12:45 to 1:15 p.m. So what you can see is that there are 3 macros in front of you which we're paying attention to when it comes to the delivery. And that proves to you as well how slow this delivery was, how much back and forth going there was. It was actually funny, by the way, because on the mentorship forum, many of you took exactly the same trades. There was even one person who took the exact same entry right here, managed it the same way, got stopped at break even, and then re-entered here as well. I was really smiling when I saw it because it shows that this knowledge is transferable. So hats off to you, man. You see what I'm referring to. But notice that Nasdaq is beginning to expand higher now. But again, that 30-minute cycle S&T with ES is still intact. So what I'm monitoring is ES going to catch up, yes or no? If ES would catch up, then it would be, to me, the sign, okay, underlying order flow is in fact going to continue to be bullish. Weekly open is going to be the draw. If it gets oversells, maybe even 9:30 open. Notice that the market is retracing into that high from 12 to 12:30 right here. And we see the market find support inside of it so far. I want to see that high function as support on price if we're going to in fact see that nice bullish continuation towards the upside. 10-minute cycle S&T present with ES on the highest right here. Need to see that get invalidated. So there we can see that that S&T is being invalidated. And that to me is a sign of, okay, we're going to see the market expand towards the upside. My eye is drawn towards this inefficiency right here. That's the only range which I see in advance of the weekly open, which could be a potential hindrance in the sense of, okay, we might not run the weekly open in one go, but we might engineer more buys liquidity in advance of it before the real move eventually takes place towards that weekly open. Note that a new BC forms right here. In my mind, I'm again extending that BC to the right, and the reason why is because I need to see it function as support on price. But do you see how throughout this whole order flow, every single range which I had outlined was functioning as support on price? And because that is the case, I am still confident in the fact that we're going to draw towards point B, draw towards that level which I had outlined. So I have full trust in my own ability to recognize, hey, what the move from A to B is. A, right here, Friday low, to B, that weekly open, and our imbalance, of course. So what you can see right here is that Nasdaq repriced below that BC, which I had outlined to you, had to function as support on price, and it traded below this low, whilst ES was also rolling over. That is why I took another partial at the price level, where I initially took a partial at as well, if you pay close attention. Do you see that? The reason why I'm doing so is because if we would in fact roll over again, once I recognize that we did not see the bullish continuation towards the objective, which I wanted to see take place, then that would be, to me, again, something which I would not be a fan of, and therefore doing the right thing and managing the trade accordingly. 1 p.m. opens up, and what I'm monitoring for 1 p.m. is whether or not we are going to reject these CBs right here or displace through them. If we would see price displays through this sequence of imbalances, then would signal to me that we're in fact going to indeed see that run towards that week open occur. Note that there's S&T right here on the lows. And that right there is to me a sign of, okay, we might actually see that run higher occurring. But again, notice how messy this all is. How much back and forth going. And this is what high resistance liquidity runs look like, guys. And in my opinion, it's better to avoid these types of environments. And the reason why is because, especially if you're a completely new trader, you are looking at this. And keep in mind, this is a 1 minute chart in front of you, yes? Recording begin right here, 11:15. We're now nearly 2 hours further. So for 2 hours, I was looking at the charts, managing my positions, etc. And that right there is, in my opinion, too long. I'm handling it, don't get me wrong. I can sit in front of the screens for hours. But when it comes to the ideal setups, they're usually done within less than 30 minutes. Why? Because then we enter as low resistance is taking place, and then the market just simply expands and runs in our favor. And what you can see is that in this high resistance liquidity run environment, the market is stopping in advance of that weekly open multiple times. Why is it doing that? The reason why it's occurring is because more buys liquidity is being engineered in advance of that level before the real move eventually occurs, where the market takes out or reaches that level. So what you can see here is that 90-minute cycle S&T is being established with ES relative to the previous cycle high, the one cycle high. And that right there is a big warning sign. And the reason why is because price might again retrace pretty deeply before it actually makes that real move. But the fact that we did not reach that weekly open is making me believe that this is simply the engineering of more buys liquidity for a later moment in time. So I hope that you're beginning to see how important it is to know your point of interest and to know your draw liquidity. My draw liquidity is this week open. It's that hourly imbalance which I had outlined to you prior throughout my market review. Therefore, the moment that I see the signs of reversal taking place at my point of interest, which is that Friday low, where we saw those huge time cycle S&Ts be established, I have full trust in the fact that we are going to reach that weekly open. But how we will get to that weekly open will be something which we have to monitor to see whether or not price is going to get there in a clean way. And as you can see, this is a very messy delivery profile with a lot of sideways delivery before pushes higher took place. The fact that we again did not run the weekly open after we saw the 3-minute cycle SMT. So we saw 3-minute cycle SMT and did not see this expansion higher towards the weekly open. It's typical, man. It's literally typical for this environment, because in any other normal environment where the indices would be moving in tandem with each other, this SMT right here would have set up a massive expansion higher with big green candles. Notice that the macro from 1245 to 115 is also coming to an end now. So to me, I need to see the market run the weekly open rather soon. I'm giving it a bit more time because, as outlined, I've already taken partials. I'm already paid for the day. And I'm simply waiting whether or not my final objective is going to get met. Notice that we formed this BC as price displays through the sequence of imbalances. So I need to see this BC function as support on price if we are in fact going to see that run towards that weekly open now. If we would displace below this BC, begin using it as resist on price, and we would not have taken out the weekly open yet, that would again be to me a sign to partial out of the position. So what you can see is that I'm not only pyramiding into my trades, I'm also scaling out of my trades by partialing accordingly. And the reason why this is important is because since this is a very high security run environment, what I'm doing is I'm making sure that I'm getting paid along the way as the warning signs just continue to stack up. And there we can see that the market is being repriced towards that objective. And that is where I'm monitoring, okay, are we now going to tap it? Yes or no? Again, 10-minute cycle SMT on the highs. And this is so typical for this delivery, guys. And this is what I mean when I say, when you see this type of delivery, high resistance security run, this is just, man, it's draining. It costs a lot of energy to look at this. But when it comes to all of this, it's simply a matter of, okay, entering as low as possible and letting it run. That's the only way to navigate this. And if you try to scalp inside of an environment like this, where you try to dance in the middle, so to say, you're getting wrecked right here. Why? Because look at how many times price is trying to get towards that weekly open, failing to do so. And then that right there is simply a result of everything just being so messy. And because I bought this low, I don't care anymore. At this point, I'm simply keeping in the back of my mind, okay, stop is trail towards this low, the low of 1230 right here. We should never ever come that low anymore. Price should just run the objective or it's going to take me out for that trailed stop in profit. And then it is simply the case. And here you can see that the market is being repriced towards the lower end of that imbalance that I've outlined right here. 10-minute cycle SMT after 1:30 p.m. And from that moment in time, what I'm monitoring is if price is going to show the signs of beginning repricing towards the upside from here. If this 1:30 p.m. open low is not going to set it up, then I'm already thinking, okay, we're likely going to roll over completely. So at this moment in time, simply waiting. Now we can see that there's also 3-minute cycle SMT be established right here inside of this inefficiency. And all that I'm doing, by the way, at this stage is I'm managing the position. So what that means is basically I'm monitoring how price is going to react to the levels which I'm monitoring. And if we're going to see them function as support on price. If they do, then it signals that we're likely going to see that run higher still occurring. But all these SMTs on both sides of the marketplace are simply too messy. And that right there is one of those characteristics of high resistance security run environments. But the thing is, when it comes to these type of environments, managing trades is possible, but re-entering or taking more trades when you see this type of delivery is, in my opinion, not worth it. And the reason why is because the mental drainage that you would experience if you're in a position that is this long, where price is just going sideways around your entry. Imagine if you would, for example, bought this BC right here. Imagine if you would go long here. You would be in that position, right, for about 30 minutes or more, and price is still hanging around your entry. That's all a result, yes, of this being a consolidating environment. And that right there is an environment that is simply not worth it, in my opinion, to try and engage in. Before high resistance occurs, we can definitely look for entries, but as high resistance is already printing, don't even consider entering anymore, because you missed out on the move. The real opportunities present itself in this area right here, where we saw that low formation taking place on the higher time frames. So what you can see is that price is slowly grinding towards the upside right here. And now I'm simply monitoring, okay, are we in fact going to see that final push higher towards that weekly open? I was mentioning on the membership forum as well is that the reason why the delivery was so messy was due to the fact that we saw Nasdaq and ES and the Dow completely move out of tandem with each other. And that is something which you can start paying attention to when it comes to anticipating higher security runs as well. Again, 10-minute cycle S&T here on the highs, as you can see, where the indices are not moving in tandem, but I'm wondering if that is going to get invalidated. If that would get invalidated, that would signal that for the current time cycle, price is in fact in a buy program, because what macro are we now in? We're now already in the macro from 1:45 p.m. to what? To 2:15 p.m. So what you can see is that we literally went through 4 macros together, and that right there shows to you how much of a chop this was and how much of a mess this whole delivery was, because again, 30-minute cycle S&T on the highs established, and we see Nasdaq reprice lower right here. New S&T being established on the low, so in my mind I'm thinking, okay, it has to run now. If it doesn't begin running towards my objective of the weekly open now, I don't care, I'm going to cut the position. And that was how I was thinking about this. So I was literally giving it 30 more minutes more until 2:15 p.m. and that is when my objective had to be met. At this moment in time, simply waiting, and I need to see price begin expanding soon. Why? Because we're now in the beginning of that new macro, and the moment that this big green candle is beginning to print, that's where I'm beginning to get confident as well. It's okay, we're likely going to see an expansion higher taking place. Paying attention to the delivery as it's taking place in this area, and the moment I see this expansion higher occur, that's to me the sign, okay, weekly open, take partials. Why? Because this was all such a mess. This all took so long, and when that weekly open was met, I said on the mentorship forum as well, if you are in longs right now, it would be wise to take something off. It would be wise to take a partial. Do you see how price stopped again in advance of that weekly open right here? And this is typical because again, bias liquidity is being engineered. Retracement into this inefficiency, and then when the market expanded towards that weekly open, and we eventually traded above it before rejecting it and rolling over again. And that right there is a characteristic of high security run environments. I apologize if this recording has bored you. I know that some of you, or probably the majority of viewers, have already clicked off because it was such a slow delivery profile. But that right there is simply just a sign of impatience, right? If you watch this recording all the way till here, I must congratulate you because it shows that you're patient. It shows that you have what it takes to simply just look at these charts and hear me explain what I'm looking at as well, and basically just sit back and observe. And that right there is such an important character trait to develop. And I'm very happy that you watched this lecture all the way to the end. I hope that you found this lecture insightful. Again, not the prettiest delivery, but from a trading perspective, great management. Very happy with the move as well, because the returns were definitely worth the risk that was taken. I want to wish you a very nice day, and I want to wish you good luck in your studies. Be safe.